How the global monetary system is destroying the middle class and the American economy. I'm going to explain this to you in 3 simple, fast steps. Step number 1, it all starts with understanding the petrodollar global monetary system we have today. This started back in 1974, and as a result of this petrodollar system, we have charts that look like this. Absolutely shocking charts, I might add. This one really set me back when I found it the other day. And I want to also add that this entire video is based on Lynn Alden's most recent blog post on the petrodollar system. We'll put a link in the description below. But this is a chart she had on there. Starts at 1985, goes all the way past 2015. On the left, we go from $10,000 up to $60,000. The blue line represents the median male income. And before you guys get all hot and bothered and say everything's sexist and misogynist and racist and blah, 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 relax, relax, relax. The reason they're using median male income is to try to determine how a one-income family has gotten squeezed over the years. Back in 1985, the majority of one-income families were male. So if they combined female and male incomes into an average, it would have skewed the numbers. This red line represents the expenses. So that would be college, vehicle, health insurance, housing costs. So the average expense or the normal expenses for a 4-person family. And you can see how back in 1985, the income was a lot higher than the expenses. And over the years, the expenses have gotten higher and higher and higher and have risen a lot faster than the income. So we get to a point here in about 2013 where the lines actually crossed. Think about that for a moment. So the average household out there, if they want to exist on just one income, it's absolutely impossible for them without going underwater and taking on more and more debt every single year, which eventually will end up in bankruptcy. So the bottom line is it's almost impossible for the average family to live on one income today in 2020. And that's a direct result from the petrodollar system we incorporated back in 1974. We'll go ahead and connect the dots in step number 2. So in 1974, the U.S. does a deal with Saudi Arabia to price oil in dollars. This creates artificial demand for dollars because obviously there's a lot of oil that's going back and forth across the world. Also, because oil is in such high demand and there's such an absolute need for it in every single country across the globe, most of the trade started to transfer into dollars. So if XYZ Corporation, let's say in Mexico, was selling goods, they want to sell those goods in dollars to have the FX reserves and potentially buy oil in the future. This also creates this self-reinforcing kind of positive feedback loop, where because all of the oil transactions are done in dollars, a lot more trade is done in dollars, therefore all of the new debt that is issued done in dollars. This brings in the euro-dollar system that we've talked about many times on this channel. Don't want to go down that rabbit hole, but it all starts with pricing oil in dollars, creating massive excess demand for those dollars themselves. But all those entities, corporations, global corporations that are receiving those dollars, they don't just put them in the bank and save them. Often they buy U.S. assets. And we've heard about China doing this, buying U.S. treasuries. So what this does is this artificially inflates the stock market, increases the value of bonds. In other words, decreases the overall interest rates in the economy. More on that later. And increases the value of real estate. So what does that mean for the average Joe? the average American living in the economy? Well, their interest rates are a heck of a lot lower, asset prices are a lot higher, and the goods that they have to buy at Walmart, Home Depot, Target are a lot cheaper. So this gives the average American a much higher standard of living than they otherwise would have if they had to rely exclusively on their own productivity and hard work. For more insight on how the petrodollar system actually works, let's go right to the internet and check out a really cool YouTube channel called The Infographics Show. Check it out.
The petrodollar system elevated the US dollar to the world's reserve currency, and through this status, the United States enjoys persistent trade deficits and is a global economic hedge money. We all know that in the world, the most in-demand resource is oil. It makes oil-rich countries very wealthy, and it's priced in dollars that makes the USA's currency the most dominant currency in the world. Some say this gives the USA something called exorbitant privilege, which means, according to Investopedia, the USA can perpetually finance its current account deficit by issuing dollar-denominated assets at very low rates of interest, as well as becoming a global economic hedge money. The USA can just print its own money, which is nice for the USA, as it can pay off its massive debt with that money. Imagine you were broke, but could just borrow and then just go to the money tree in the garden to pay off the debt.
Now let's go over a whiteboard visual of the petrodollar system, and I'll give you some of my own comments that are a little bit different than what they went over in that YouTube video. Right in the middle, we have this amazing drawing of the United States. You can tell because Florida is always right there. And the United States goes to Saudi Arabia in 1974. They work this deal. They say, price oil in dollars and we will basically be your military. That's kind of the deal that they had. So now all of the countries like Mexico have to somehow get dollars to buy the oil they need from Saudi Arabia. So this Mexico corporation, let's say, is selling t-shirts. So they're going to sell their t-shirts to Saudi Arabia for dollars because they need those dollars to buy the oil. So it's this circular process. Well, at the same time, the Mexican corporations, I'm just using Mexico as an example. This would be any country around the globe. They're most likely going to want to take out dollar-denominated loans from Bank XYZ, let's say in the Cayman Islands. The bank in the Cayman Islands can do that because of the Eurodollar system we talked about earlier. They can create dollar-denominated debt. So they do this for a couple reasons. Number one, they most likely need dollars to buy the supplies they need because 80% of global trade, or 60%, let's say, is done in dollars, going back to the origination of the petrodollar system. And because the dollar is so widely used, prices are much more stable, meaning there's less likely that the dollar will crash long term because of this artificial demand. Therefore, the interest rates are a lot lower. So the Mexican corporation can borrow in, let's say, Mexican pesos at 15% interest, or they can borrow in dollars at 5%. It's going to be a no-brainer. So again, you have this positive feedback loop that's creating more and more demand for United States dollars. As a result, the interest rates in the United States are a lot lower than they otherwise would be. So asset prices go up as a result. Let's say we've got the average Joe here, and he is extra large. He is way overweight. This is the average Joe in 1974, and this is the average Joe today after 40 years plus of the petrodollar system. We'll get into why in just a moment. The average Joe XL version has his house increased in value to where he has an extra $500,000 in equity. His 401k has gone up by $500,000. So he has an additional $1 million worth of purchasing power without having to do any extra work whatsoever. He didn't have to produce any more widgets. He didn't have to work any extra hours, but his purchasing power increased significantly. So his standard of living goes up. There's no more stuff that's being produced by society. So where does the stuff actually come from? It comes from China. So China is more than happy to take these dollars because of the artificial demand from the petrodollar system. So China takes these dollars, they do the hard work. They use their scarce resources with alternative uses to produce the stuff they send to the United States for Excel version of the average Joe to consume because he's not producing it himself. He's just living on the fact that his assets have gone up in value. So those dollars go to China, but they turn right back around and buy assets with those dollars they're accumulating. So think about this. We send them dollars, they send us stuff because we're not producing the stuff ourselves. Then they take those dollars and buy US debt, treasuries. They buy stocks, they buy real estate. So if you take this to its logical conclusion, if we continue to outsource all of our producing of stuff to other countries, at some point in time, those other countries will own all the assets in the United States. And right about now, your friend and family member Fred is saying, well, who cares? Why don't we all just sit back on the couch, relax, never work a day in our lives if all these foreigners are willing to produce all this stuff and all we have to do is give them green pieces of paper? Who cares if they own all the assets? I would remind your friend and family member Fred what wealth actually is. See, is a society wealthy just because it has a lot of green pieces of paper? I don't think so. The wealth of the society is its ability to produce goods and services efficiently. So if China, in this case, can produce 100% of the stuff and they own 100% of the assets, who in this equation is rich and who is poor? See, China is getting rich while every single average Joe, even the Excel version, although they think they may have a high standard of living, in reality, in the long run, they're the ones that are poor. Step number 2, how is the petrodollar system specifically destroying the middle class? Going back to step number 1, we saw how the artificial demand for dollars allows the United States to run a huge trade deficit, meaning we can import most of our goods and services and we export very little. So we're not producing the stuff we consume right here in the United States. It's being produced outside the United States in places like China, Mexico, and even Europe. But because the petrodollar system has helped the dollar become the world reserve currency, this creates this artificial demand. So even though we have huge trade deficits, the dollar remains relatively strong. If we didn't have the reserve currency and we ran these types of trade deficits, the value of the dollar relative to other currencies would go down dramatically. And it would keep going down until we started producing more than we consume, exporting it, creating real demand for dollars instead of this artificial demand for dollars. The net result is it allows us to outsource all of our manufacturing. Because why should we do it here in the United States, work hard, when we could just outsource it to another country and get those exact same goods at a much cheaper price? And the only thing we have to do is give them our dollars. They take those dollars, buy treasuries, decreases the interest rates, which allows asset prices to go up. And the Americans that own those assets feel richer and richer as a result. But unfortunately, what this does is it outsources not only the manufacturing, but a lot of very high-paying jobs. And it replaces it with lower-paying jobs, which reduces real wages, going back to this shocking chart that we went over in step number 1 that shows how expenses for the average family are increasing a lot faster than the average income. This is really putting the squeeze on the average Joe. So prior to the petrodollar system, the United States had a very solid manufacturing base. And I'm not here to say that it is all manufacturing, but we ran surpluses. We were a creditor nation. More on that later on in this step and in step number 3. But we were considered very rich. We produced a lot of the stuff that was consumed, not only in the United States, but outside of the United States as well. But then we started sending those very good manufacturing jobs overseas. What did we replace them with? The economy that we have today. After the petrodollar system was in place, and now after 40 plus years, instead of seeing a lot of manufacturing, we see things like Uber, Topgolf, DoorDash, basically food delivery, a lot of restaurants and bars, lawyers and accountants. This is really an economy that revolves around domestic services. But the goods consumed inside the economy are produced outside of the domestic economy. They're not produced in the United States, giving us these huge trade deficits where we're importing most of the goods we consume. But to really wrap our minds around how much this petrodollar system has destroyed the middle class in the United States, and I would argue our entire economy from a fundamental standpoint, let's go right to Lynn Alden's blog post. Look at the charts, look at the data that really puts this into perspective. The first chart from Lynn's report that really stands out is the United States balance of trade, so the trade deficit or surplus. And we can see what happened right when the petrodollar system began in 1974. The trade deficit started to get worse and worse to where it is today at almost an all-time high at $70 billion per month. So that means that we are importing $70 billion more goods and services than we are exporting to other countries. In other words, we are consuming far more than we produce. And like we said in step number 1, the people that are producing those goods, they're taking the dollars they earn and buying U.S. assets. And this next chart shows us to what degree. The U.S. net international investment position has absolutely collapsed. These are Lynn's words. With the U.S. having gone from being the world's largest creditor nation to the world's largest debtor nation. And it looks like we crossed that Rubicon right in the mid-1980s. The net international investment position of a country measures how much foreign assets they own minus how much of their assets foreigners own. The chart above shows it as a percentage of GDP. As of this year, the United States owns $29 trillion in foreign assets, while foreigners own $42 trillion in U.S. assets, including U.S. government bonds, corporate bonds, stocks, and real estate. As we said earlier, this is a result of accumulated U.S. trade deficits and now puts the U.S. in one of the weakest positions in the world in terms of this metric. The United States is negative 52%, and the only countries that are worse are Spain and Mexico. These next charts show us how the United States has really become a country of haves and have-nots, and how this petrodollar system has destroyed the middle class. Percentage of wealth owned by the top 1%. That has grown in the United States since 2000, and we are higher than any of the other developed countries. A lot of people would say this is a result of higher taxation. That is utter nonsense. It's a result of the petrodollar system, our manufacturing being outsourced, and asset prices being artificially high. Therefore, the people that own those assets are artificially rich. The next chart shows us the net worth held by the bottom 90% has decreased substantially, while the net worth of the top 1% has increased dramatically since 2000. The gap between productivity and typical workers' compensation has increased dramatically since 1979, And this really shows us the effect of the petrodollar system on the middle class. We can see productivity going up, just straight up to the right, an increase of 252%, while hourly compensation stopped and just went sideways since the end of Bretton Woods and the start of the petrodollar system. And this next chart shows us that although we like to believe the United States is the wealthiest country in the world, it's really not true. According to the 2019 Credit Suisse Wealth Report, although the United States is wealthy per capita, because that wealth is so concentrated, the median American net worth, which represents the 50th percentile, the person in the middle of the spectrum, is actually lower than the median net worth of most other advanced countries. And finally, we go over this extremely sobering chart that really tells the story, the chart we've used up on the whiteboard. A year of wages no longer covers a year of family expenses. And this is major annual household expenditures for a family of 4 versus median male income. So we've got college, vehicle, healthcare, housing now exceeding the level of the median income. So the middle class of America is becoming poorer and poorer every day as a result of this petrodollar transforming our economy into a domestic services-based economy that is heavily reliant upon huge trade deficits and foreigners producing all of the goods we consume. So we know what it was, we know what it is now, but the most important question to ask is what happens to the American economy in the future? What happens to the average Joe and the middle class? What is the end game? Step number 3, the end game for the middle class and the American economy. We have to understand that the petrodollar system we were talking about in step 1 and 2 is starting to disintegrate. The demand for dollars is starting to decrease globally. I'm not saying that the dollar is going to lose its reserve currency status tomorrow or in a year. But I am saying that demand for dollars is gradually deteriorating across the globe. It's a slow process. It doesn't happen overnight. And I think that in 15, 20 years, there's a good chance the dollar won't be the reserve currency. And I totally agree with Lynn Alden's base case that there might not be a global reserve currency. It'll be decentralized to where different countries are doing business with different currencies. Maybe Bitcoin, maybe gold, who knows? And we can see this playing out right now. We look at a chart of exports from Russia to China. 6 years ago, 98% of these deals were done in dollars. Now it's only 33%. The majority of the transactions are now done in euros. And it's the same thing if you look at exports between India and Russia. Now it's mostly in rubles. And China, the One Belt, One Road initiative, or now they like to call it the Belt and Road initiative, whatever you want to call it, what happened is China stopped taking their dollars and buying treasuries. In other words, United States assets, took those dollars and spent them on infrastructure projects outside of China. So the bottom line is if there is less and less artificial demand for dollars and the dollar goes back to, I hate to say its intrinsic value because the intrinsic value of any fiat currency is 0. But let's say the value of the dollar based on our exports, imports, or our trade deficit. On the DXY, the dollar would go from, call it 90, all the way down to 50, down to 40. Who knows how low it would go? But the net result would be all of these goods that we have to import into our country would go way up in price. So the dollar versus imports would go down. The price of the imports would go up. What does this mean for the average American? Let's pull up a chart of our main importers: Target, Home Depot, Walmart. So what this means is the prices of the stuff you buy on a daily basis would go up massively. We're talking double, triple, maybe even quadruple in price. We would have to start consuming what we produce. But remember, we don't produce that much. It's an economy that's based on domestic services. So when there was tremendous artificial demand for the dollar outside of the United States, we were able to import low prices into our economy. Therefore, our standard of living was much higher. But now, or in the future, we would be importing higher and higher prices into the United States. It takes us right into this economic doom vortex. So prices are going up, sales going down because people can afford to buy less. If sales go down, jobs decrease. If jobs are decreasing, that means the amount of spending in the economy decreases. One man's spending is another man's income. So if spending goes down, incomes are going down. Foreigners are buying fewer and fewer U.S. assets, which means spending goes down even further. If the Fed or the government saw this happening, what would they do? You know just as well as I do. It starts with Burr, the money printer. They would print up money and make it rain on the real economy. So this money printing would increase the amount of currency units that were chasing an ever shrinking supply of goods and services. This makes prices go even higher, and we go right back into the doom vortex. It takes us into this negative economic feedback loop that just gets worse and worse and worse. And right about now, I'm sure your friend and family member Fred is coming in and saying, "Whoa, George, time out. You are crazy. What are you talking about? If the dollar goes down in value, that means that our exports are going to be more attractive. So all of that manufacturing that we outsourced in the past is going to come right back to the United States, and we're going to be rich again. We've got nothing to worry about. You're just fear-mongering." What I would say to your friend and family member Fred is, how is that manufacturing going to come back with all of the regulation we now have in the United States? And I'd like to point out the regulatory environment in the United States isn't getting any better. It's going to get far, far worse. Also, if we have the dollar going down in value, it's losing its reserve currency status slowly, artificial demand going down. There's going to be capital flight out of the United States. You're going to want to take your dollars. You're not going to want to invest here. You're going to want to invest somewhere else where the risk reward is a lot better. Let's not forget about taxes. There are no certainties. There are only probabilities. But one thing that I think has an extremely high probability of coming to fruition is taxes in the United States going up. And finally, we've got the Great Reset agenda of the World Economic Forum. Not exactly business friendly. So if you've got $1 billion, do you really want to put it to work in a country where you've got all of these headwinds, including Klaus breathing down your neck, trying to regulate you out of existence? I don't think so. So the probability of taxes going up is extremely, extremely high. The probability of the manufacturing coming back to the United States is extremely, extremely low. So the main takeaway brings us right back to the chart we started with. Only in the future, what's most likely going to happen are the expenses are going to continue to go up while the incomes will continue to go down. And this is how the petrodollar, the global monetary system, is destroying the middle class. For more content that'll help you build wealth and thrive in a world of out-of-control central banks and big governments, check out this playlist right here, and I will see you on the next video.